everybody. How are you all doing? Morning, Danny. Morning, FD. Morning, CK. Say morning if you're here. We don't have to say morning. Say whatever you like. But just so I know how many people we got, roughly. Morning, Mark. Just a quickie. Market's just opened. The FTSE's just flown for the high of all-time highs. I think it's last month's high. No, it's not all-time highs. Sorry, it's last month's high. It's just been taken out on the FTSE. Next stop will be all-time highs, which is somewhere in the region of 150, 125, 150 ADR today. So that's within reach today. So nice clean break this morning on the FTSE. No trade on the DAX, although the DAX pre-market is going as well, but the range was too small, just about. So that FTSE's gone very nicely. So we'll see if we can get some continuation on that today. Be nice. Breaking out this range at last. Morning, everybody else. Morning, Sarah. Morning, Jules. Morning, Barry. How are we doing? So today we're going to do the usual stuff, look through the news, etc., etc., and spend a little time this morning looking at the support resistance zone EA. And I've built an auto trading functionality into it. Which isn't really designed to auto trade necessarily. It's designed to automatically draw the blocks on the chart, although it does make money. So, don't know. It needs some testing anyway. But it's designed basically so that it automatically draws the blocks on the chart to prompt you to do something with them, really. But it will move them every day. I'll go through exactly what that functionality does. But one of the reasons I've built this in, which we'll go through this morning as well, is in the marketplace to be able to get products up for people to get them, basically. You have to have some kind of auto trading in an EA. Otherwise, it won't take any trades. If it doesn't take any trades, it won't pass the marketplace scrutiny. So when you upload a product, an EA, onto the marketplace on MQL5, it has to do certain things. It has to be tested for lots of things to make sure, obviously, it's going to work, first of all, and then it's not dangerous. One of the things it's got to do is obviously take trades. Because this is a manual trading product I'm building, it doesn't take trades. So I've had to build in some auto trading functionality. So I'll go through exactly how we've done that, or how I've done that this morning. And then we will look at how we can use that potentially moving forward. But quite a few people have asked for this. Some people who aren't members have asked for this as well. So there's been a leak somewhere. Yeah, I don't care. So some people have asked for it because they want to use it. So I'm going to try and get a version of it out as soon as I can. But only on MT4 at the moment, not MT5. So I need to build the MT5 version out anyway. So we'll go through that this morning. That's what I'm planning to do, and the usual trading stuff. So morning, everybody else. I haven't said morning to Lucas. Morning, Barrier Man. Caught up on the previous videos on this. All right. Okay. Yeah. Cool. So we'll start off with the news this morning. It's a very low news day today. We've had the CPI for the Swiss franc came out as forecast. So not quite sure what that's going to mean for the Swissy moving forward. The market reaction for it is negative, ever so slightly. It's not massively negative, but it's a slight negative this morning. A little bit of bullish movement, but not a lot. So there's no ADRs hit today at all. So market's not really reacted to it. It is negative, meaning that CPI is dropping still. Their interest rates are incredibly low, meaning that it will probably continue to go down. So Swissy bearish unless we have any conflict kicking off, and then obviously it will go bullish. We got Jolts this afternoon. Jolts is very hit and miss. So we'll see, but there is possibility of movement this afternoon. But other than that, that's it. Be aware of GDP on the Aussie overnight, and we've got talking heads from New Zealand. So that's the news. Overnight news is not really anything much. There's your Swiss CPI. As you can see, we had a bit of movement but nothing exciting. Other than that, not a lot else. There's a hell of a lot going on in France at the moment. It looks like there's a revolution going on. The government's going to get overthrown. So the euro, be wary. I haven't got much exposure long on the. I haven't got any exposure long on the euro, which is good. I'm short only on the euro. Exactly where I want to be. This is not going to be good for the eurozone. All this stuff that's going on in France. Basically, looks like Le Pen is trying to overthrow the government with what's been some healthcare stuff they wanted to do, etc., etc. It doesn't really matter the ins and outs of it, but instability is negative for currency. So there's a lot of instability at the moment going on. Possibilities of the government being thrown out by the end of the week. All sorts of stuff could happen, but not going to be good for the euro. So shorts on the euro only. Most of the euro pairs are short only anyway, based on swap costs. So I am only exposed short, which is fine. But yeah, we'll see what happens with that. So that's the main news to be wary of today and what's going on. Obviously, we need to be aware of Trump and him opening his mouth. Morning, Sega. But that happens every day. I expect GDP to be at 2.5% this year, might be higher. So the US forecasting strong economic growth, unemployment rate between 4 to 4.25. That's where it always is. No news there. Inflation to be around about 2.25 for 2024, pretty much at target. So that's positives and negatives in there, so you can't read much into that. But that's all we've had overnight, nothing much else. So still leaning towards cuts for December for the US. So good chance of some bearish movement coming in on the US, which would support the Santa rally theory, because if we're going to get a Santa rally in the stock markets, as we often do in December, that would mean a weak US dollar. So if any of you are still in US dollar CAD, we could be down further, but we'll see. So that's your news. ADRs, none. Weeklies, none. Monthlies, none. It's the beginning of the month. So there's nothing moved overnight in Asia. The only extension we've got on RSI is the Swiss yen to the downside. So there's an opportunity to long that, very nicely extended, but it has been extended since kind of the middle of last week. Very, very strong yen move going on. We had more strength on the yen yesterday. Big strong moves again on the yen, as you can see. So all the yen pairs came down yesterday, but they're all going back up again today. So I like all of these. I'm US dollar yen long. It's the only one I've got on at the moment. And Soslaw, it's the one that's not moving. But anyway, so that's last month's low, basically. We tried to take out. Yes, is that last month's low? Yeah, that's last month's low that we tried to take out yesterday, but we are at last month's low. We closed at the lows. If you look at the daily chart, we actually closed at the lows last month, pretty much. That's a daily chart. There we go. So yeah, that's where we closed. We closed bang on the lows there. So as you can see, yeah, I'm not sure about the yen. Really don't know where it's going at the moment. So, but that's the only long I've got on that one. Right. Other strategies. So the other strategies we've got in forward test. This is the lazy trader strategy. As you can see, we're up to 2.79% since we started. So a nice gradual growth, sitting in 1.83. This thing seems to be sitting in drawdown constantly. There's always going to be a few trades which aren't going to hit target like that every single day. Those are the ones which are going to get held over. So it's constantly banking, and it's going to get the odd blip where it has to do drawdown control when it gets to 6 positions or more. But apart from that, it's working exactly like we saw in the strategy test when we did all the testing on it. So yeah, I'm happy with it. But the only thing I'm not happy with is the money it makes. It's not very profitable. Well, it is profitable, but it's for me, banking $10 on an instrument is, super scalpy, isn't it? It's working very well, but it's going to take these big losses every now and again when it does draw down control. But it more than makes up for them, obviously, with the continuous banking of profit. So I kind of like it and I kind of don't because of the way that it works. But you can't argue with the numbers. It's something I think you'll probably find is going to be a grinder, which is going to make somewhere between 3 to 5% a month every month, quite consistently. So it's a good, consistent growth strategy. So I'm toying with the idea of rolling it out live on a proper account. But I just want to see, I want to see it do a few more drawdown controls first. I want to see something go a little bit more wrong. New Zealand dollar yen I stuck it on some Swiss and yens basically just to test it out. So I want to see it kind of go wrong a little bit more, if you see what I mean. But it hasn't yet. Morning travel, morning Wojciech. I can't say it. I'm never going to be able to say it. Sieradzki. I can't even say that bit. Mark, can you increase the risk on it? Yeah, so with this strategy, at the moment, it's working as it was kind of given to me, which was using 0.1 lot sizes and incremental increases. So you take a 0.1. If the first one doesn't work out, which is that one there, 0.1, you take a 0.11. If that doesn't work out, you take a 0.12. Yeah, so it's just gradually increasing to keep the average a little closer and under control. Your way is best so far. Good, I like that. And so yeah, but and you know the idea is as long as markets move rationally like they do the vast majority of the time, 95% of the time, this thing is just going to continuously bank money. It's those odd squeezes where it's going to hemorrhage, and that's when it's going to hemorrhage the big amounts, $300 to $500 at a time, which can wipe out the profit. So we've seen it in the back testing. We've seen how it works. You get the dips in the back testing, so we're expecting them to happen. But it's all using 0.1. Now, the problem with using a 0.1 lot size initially is that your risk is not going to be the same on every instrument. So when you look through the P&L here, you'll see that there's some, so that Euro CAD there where we had 3 trades on, that one there made $15, $16. That odd Swiss there and that odd Swiss there, between the two of them, made $30. Sorry, no, that's not right. That odd Swiss there and that odd Swiss, yeah, made roughly $30. So you're going to get very odd amounts of money being made. Just trying to find one. So there's, you know, it made $3.30 there on an Aussie New Zealand trade. So what I think it needs is it needs a monetary risk done. So I might recode it a little bit so that instead of using a 0.1 lot size, it uses a monetary risk over distance, because that will even out the reward to make everything give the same reward. Because what the danger with running with a fixed lot size is, if, for example, let's say the pound yen is the one where a 0.1 is worth 3 times more risk and 3 times more reward than something else, if that is the one that gets the drawdown, you're taking 3 times the loss where you don't need to. You should be taking the same loss on everything and the same reward on everything to make everything consistent. The idea is that the strategy continuously plays out. If there's one in there that's a lucky one, yes, you're going to make more money on the big moves, but you're going to lose a lot more as well. So it needs a level playing field. But for initial testing, I was using the 0.1 lot size so that we could see it working, make sure it did everything that it needed to do. The TPs were going in the right spot. It was trading correctly, and it's doing everything exactly right, but the risk is wrong. So that is with an uneven risk parameter. So that's what needs to be changed on it. So I need to spend a little bit of time working on it, but it's good. You know, it's a nice, it's a scalping EA, so it works well. Does it need to be risk adjusted to ADR? Yeah. So yeah, so basically what I would do is I would say I would use the same methodology that I use with my other EAs, in that it would take a trade, it would place a stop loss at a distance to work out, because when you're programming EAs, if you're going to use a monetary amount of risk over a distance, there has to be a stop loss, because the EA calculates the risk, or calculates the lot size based on the risk over distance. So that calculation has to be in place. So it has to physically place the stop loss with that there, and then it just deletes the stop loss. So so that's how it will work basically. And I need to rebuild it to do that. And it doesn't matter what the distance is. It could be an ADR, it could be half an ADR, it could be quarter of an ADR, whatever. It's just it'll be consistent. So I'll probably just do it over an ADR because it's easy. So you could say I want to risk $100 over one ADR, which is 380. You know, so 380 is. Oh no, that's is it 380? Yeah, but anyway, whatever it is. That's how it'll work. So that's doing very well. The trend pullback strategy. Sorry, just briefly, what's the entry criteria on this? Very simple. There's a video on it. I thought you said you'd caught up on this, Barrier Man. Oh no, you haven't caught up on this one. You caught up on the other one. So yeah, very, very simple strategy. All it does is, if it's a bull day, we go short. If it's a bear day, we go long. Hard, isn't it? That's it. So all it does is literally, if we get a bull candle end of day at 11 p.m, we short it. If we get a bear candle at 11 o'clock, we long it. And the target is 1/3 of the ATR set. And in this case, what we're testing is ATR on the 4-hour time frame. So it's the 4-hour ATR 60, and we're targeting 1/3 of the 4-hour ATR 60. So what we're saying is, whatever the average true range on the 4-hour chart is, which would be somewhere in the region of that, on those candles there, we're targeting 1/3 of that. So it's scalping. So literally the idea of the strategy is, let's find one that's open. There you go, Euro US dollar. Oh, yeah, that's a single. Euro US would be at the front. There we go. It's just about to hit target. Yeah. So bear day, entry at 11 p.m. Look, just while I was talking, there you go. TP hit. So we're literally looking to scalp. So what we're saying is, at the end of the day, take a trade. Because we've had a bear day, it's probably going to want to pull back a bit and take a bit of profit during Asia. So as long as Asia moves up and down, which Asia always does, Asia is an accumulative period, just get us out while Asia's doing that. That's it. But you see, it's tiny, tiny banking. But, you know, you're banking 1/4% to 0.5% a day with the odd big day in there. You're going to be banking 1.5%, maybe 2% a week on a good week. But it's got to deal with these drawdowns, and this is the Achilles heel in it. When something goes really wrong, we have to have a get me out, and the get me out is always going to be something like $200, $300, $400. So the months where you have a big one where it squeezes, you're going to get losses. But and this is where it's important to keep an eye on exposure. Yeah. So it doesn't work very well when we were testing. There's a lot of pairs, mainly yen pairs, it doesn't work very well with. So think about what goes on in the Asian session. In the Asian session, we get all the news released for Japan. So we get big, I mean, that's Canadian, but you get big, strong moves in yen pairs during Asia. So if we're looking for something to sit around and just hit a target scalping, we don't want massive news spikes. So it doesn't work well on yen pairs. So it's just about keeping the exposure down, because if there's a massive squeeze suddenly starts on something like the New Zealand dollar, you're going to be in trouble potentially. But you know, it's the same risk with all position trading strategies. You have to do drawdown control, and the drawdown control that I've chosen to put in place is 6 trades maximum, because in testing, 95% of trades play out within 6 positions. So we'll just take drawdown on them and then we'll get out. And the idea is we're getting out at $10. That's it. We just want to get break even. So the plan is scout me somewhere around about $5 to $10 on this risk. Obviously, we can adjust this figure by adjusting our risk. But scout me $5 to $10. If we need to take more than one position and it doesn't work out, like that one there, yeah, when you've got $10 available, take it. Yeah, so it's basically, the idea is we're just constantly trying to bank $10 all the time, but we can adjust this to make it $20, $30, $50, whatever you want, by literally increasing that lot size up. So what your initial starting lot size is obviously going to make you more money if it hits the target. So if you doubled that, instead of this being can't grab it. Instead of this being $6, $8, $7, it would be $12, $16, $14. Yeah, but then your drawdown would be double. Yeah, and this is about survivability, not about banking fortunes. It's about making consistent long-term money. So there you go. That's how that one works. The other one, the trend pullback strategy, banked 4.7%. How much did it pay in swaps? Good point. So swaps, you got $1 of swaps, 1 cent, 138. I mean, the highest swap fees paid so far, positive 210 swap there on the pound Swiss. The most expensive swap was the pound US dollar at 940. That was a multi-hold. So that was the 13th of November, getting out on the 27th. So that was 14-day hold, 2-week hold. Obviously, that paid higher swaps. But the swap isn't actually that important because you are only paying one overnight swap on it. On a Wednesday, obviously, that'll be more expensive, but you're only paying one overnight swap on it, and the vast majority of holds are out within 1 to 2 days. It's the ones that are held long term which are going to cost you more. But the £10 or the $10 target, or whatever the target is you set for a multi-trade, doesn't really factor, because swaps are factored into your P&L. So it says when my P&L that I can put in my bank is over $10, close my position out. That will include swaps, commissions, and all that sort of stuff. So it's only on these ones, where you're going to potentially pay. And you can obviously always we could put a swap filter on it, but it just means it's going to take less trades. You know, there's always a right and a wrong. There's always going to be something different you can do. It's just making a decision on what it would be. So the trend pullback strategy, the other one that is kind of the opposite strategy, and this is basically doing the opposite thing, which is euro yen. This is trading all the yen pairs and Swiss pairs only, and what this is basically doing is when we get a bear day like this, we put a pending order in to assume that we're going to continue in that direction. So this is for trending pairs like yens and Swisses that trend nicely. Basically, when we've had a down day at end of day, let me just see if I've got a pending on. So we've got a pending on US dollar Swiss and CAD Swiss. CAD Swiss there. There we go. So that's a trade that is obviously not triggered yet. So we had a bull day yesterday. So we place our pending order there, a buy limit. Sorry, at that time, at 11 o'clock, same time, we place our pending buy limit, a third of an ADR away from where price is. And what we want it to do is come back, trigger the trade, and continue that trend. If that doesn't work out, this is a stop loss based strategy, hence why it makes lots of losses. we put a loss at the low of the day. So what we're looking for is if something's trending, we want it to do that. Yeah. So every day we place a pending order and try and catch that. So that time we place a pending order, try and catch that. That's the theory behind trend trading. So as you can see, the problem is we actually hit the pending order here, but the spread was too wide to trigger the order. Can't do anything about that. And the TP is, I think it's set of 4 or 5R. Can't remember what I set TP to. Oh, 1.5R. Then it's only 1.5R. Yeah, and it's using ADR 10. Sorry, ADR 1. So we're looking at basically what's the range yesterday. At the end of the day, get in if it pulls back 30% of today's range and put a stop loss at the low and target 1.5 of it. That's basically how it works. So it obviously only makes money when the market is trending. When the market is choppy, it doesn't work. So obviously what it tends to do, as we saw in the back tester, is it has periods where it just hemorrhages and then it goes like that and then it hemorrhages. Then it goes like that. So it's a very inconsistent monthly strategy, but very profitable because when you get these home runs in, there you go. So we got $2,687 potential profit off of 3 trades there. We've done 1,200 loss. But if you remember yesterday's loss on that was 9-point-something%. We got it back very, very quick. But it uses a trailing stop loss strategy. So obviously as the trade works, we move our stop up. So we will take a lot of small wins as well. So this has not really had enough time to play out yet. But, you know, it's doing what it did in the tester as well. So again, working very well. But obviously it's going to be more annoying as a strategy because it uses a stop. Anything that uses a stop is obviously going to stop out a lot. And therefore its P&L is going to be all over the place, which is annoying, which is why we position trade. But yeah, so doing all right on both of those. So we'll see how they play out though. I'm going to give them the month of December, I think. I'll give them the rest of this month so that they will have had about a 6-week incubation period, 7 weeks. And that's enough really for me to make a decision that, yeah, the back testing is kind of tying up with what we saw, we are seeing in the forward testing. And if that's the case, then I think they're okay to set live. So, but I need to tweak it a little bit. So anyway, there's an update on those. TP1 hit. We're up to 4R on the FTSE. No trade on the DAX. I'm just going to manually trail that up. Just going to lock in a little bit more profit on it. That's a pretty parabolic move out. We're up to the highs, obviously, of last month have just been taken out. So this might be a false breakout. So I'm just going to reduce risk, or rather lock in profit. Horrible spread on the FTSE. Okay, there we go. Right, so just quickly looking at FX before we have a look at what we were looking at today. There's nothing really to look at from an extensions perspective so far. We've got no news today. Obviously, this week is non-farm payroll week. So, yeah. We got the first non-farm coming in, the ADP non-farm tomorrow. And then obviously Friday. So all the news is back-ended this week. So I'm not surprised we're not getting an awful lot of movement yesterday and today. It's quite normal. So yeah, nothing really to look at from an extension perspective at the moment. I've got a decent amount of risk on. Nice bank yesterday, 0.6. Could have banked Euro US yesterday as well. Got up to about 0.35 or something. But I want to let that run because of what's going on in the Eurozone at the moment, but it seems to be pulling back this morning. This is probably US, actually. Yeah, we got weak US this morning. So everything rallying against the US dollar. I've got exposure long, mainly on the US. So, but yeah, so that's it on that one. Right, so So basically what I've done with the EA, let me just show you what adjustments I've made to it. Let's turn that off. Turn that off. Turn that on. Okay, so basically this is obviously the support resistance zone kind of trainer, I've called it. This is version 2. So what's the difference between this version and the other version that I put out there is mainly price action. So there's 3 different variations of price action now that I've built into the EA. So the first version, basically, what it did was it required price to push into that zone and then close below that zone. Okay, so it needed a candle high above the zone, low, and then the close to be outside of it. So I've programmed 3 different variations now for price action to trade the zones. That obviously is the first one, which is in place. The second one is that it needs to open inside the zone and then close outside the zone. So that candle there would qualify. Let me zoom in. Can't quite see it, can you? So there's a good example. So candle opens inside the zone and closes outside the zone. So the other version is that we had there, for example, the high is inside the zone and the close is outside the zone. So that's the what I call the piercing entry. That is the open inside, close outside entry. And the third entry type is a bearish, in this case, because it's a sell zone up here, would be a bearish candle inside the zone. So we have a bearish candlestick there, but the open is inside the zone and the close is inside the zone. Yeah. So what we're looking at here is on the hourly time frame, to get a bearish candle on the hourly time frame that opens inside and closes inside the zone on a lower time frame, you've got some kind of reversal pattern going on. So you'll have either a 3-bar reversal on the 15-minute or the 5-minute chart. You'll have a big bearish engulfing on the lower time frame, or some kind of reversal alert on the lower time frame, basically. So what the open inside and close inside on the same time frame is doing is saying, right, well, during that 3-hour period there's been a reversal pattern lower time frame. Yeah. So I don't want to get this going into multi-time frame analysis, drawing different blocks on different time frames and all that sort of crap. Yeah, it's too complicated. And it's not necessary. Yeah, if there's a big bearish move, there's a big bearish move. The sellers are coming. Yeah, they may not continue the move, but they just had a really good go at it. On the lower time frame, you would have had a signal, you would have taken a trade. Yeah, doesn't matter what the signal is. Could have been a moving average cross on the 15-minute chart, but in that candlestick there was bearish price action. Simple. Yeah, so so that's basically what it now does. It has the 3 types of entry. And there's a couple of other amendments to it as well. So I'm just going to leave those zones in place and just let the movement happen. Okay, so also now you can see here, so there's the entry there. So the low is inside the zone, the close is outside the zone. So that's a rejection of the zone. And obviously the zones you can make whatever size you want to, obviously. So there's your entry. You'll see now that also this has turned into a different color. So this is turned into a sort of a light gray color, which indicates that this zone has been used. So the EA now will ignore this zone because we're not using it anymore. Okay, if it moves beyond that zone, it will remove it like that. Yeah. So that's basically how it works now. So that you can see the zones, because one of the things, if you were to use this live, you would be checking your charts every day, adjusting the zones to where you want them to be. And this is how I would do it anyway. once or twice a day. Then I come back in the morning and go, oh, I'm long. Why was I long? And the zone will have vanished. So in the other version, what happened was as soon as it took a trade, the zone disappeared. I won't remember if I'm trading 28 pairs where I drew that zone. Yeah, so it just turns it a different color. If the price has slammed straight through it, it's going to disappear. But there is another setting, which I shall show you, which is extend zones if price exceeds them, deletes if false. So I'm going to turn that to true and show you what the difference is. There's those three entries. Look, enter if piercing into box, enter if open inside and close outside box, enter on price action inside box. So those are the three entry methods I just discussed. Extended zones. So what this does is pretty much the same thing. So as we push down into that, oh, we've gone into that upward zone now. No, it doesn't matter. So as we push down into this zone, yeah, what you'll see is instead of when price pushes beyond this level, it just gets rid of it. What it does is it extends the zone. So every time a candle closes there, it moved the zone down to make it bigger. Okay, so two reasons for this setting. One, it obviously means your zones are going to get bigger and stay there. The second reason, and this is an exact perfect example, we've pushed into this support zone, okay, and we've continued going beyond the zone, right? But we haven't had any bullish price action coming in until we get all the way down here, yeah? So there's the low, look. There's the price action coming off the limit orders. So that's basically what I would like to do is if I get to my support resistance zones and it blows through the support resistance zone, yeah, it's extended. There's a higher probability of it going back the other way, isn't there? Because it's got extended beyond the zone. So it's another option you can use rather than deleting that zone. So the initial idea was we delete that zone and go, right, that support resist area didn't work out. What we need to do now is put another one in place because that one's been blown through. So the next one we're going to use is that one down there. That was the original plan. So, but what it can now do as well is when you get to that zone, if it goes a little bit further than expected, it will just extend the zone out and wait for price action inside the zone. Because now we've got that new entry mechanism, which is bullish price action in this case because it's a bull zone. Inside the zone, we would take a trade at that price point, yeah? So there is an option for that as well. So there's an additional functionality, if you like, in there. There we go. So there you go. So it's turned it grey because we've got down to that area. And then obviously we just wait and see what price does. You can see it's extending the zone down. So it's basically the idea of extending the zone down rather than deleting it is I want to see where the zone was. That would have disappeared. I mean, you should, in theory, know where the zone was. So if that was deleted, yeah, when you come to your chart at this time of night and you go, oh, why did I take that trade? If you don't know where you drew the zone, something's wrong. Yeah, because you should be able to look at that and go, oh, well, that's why that trade was taken, because this is where I drew the zone, because you should see the same zone. It's discretionary strategy. So you should be able to draw the same zone in twice. If I give you a chart and say draw the support resistance zones on it, and then I close that chart and give you the same chart again tomorrow, you should draw them in the same place. Because it's you. Other people might draw them in different places, but they will also redraw them in different places. Yeah. So, but the functionality's there. So that's basically the amendments that have been made to it. Okay. Obviously, we've got the messages as well that will tell you if your zone is too close to the previous one. Yeah. So when you move it down, it will say, yeah, you're okay. And then you move it up and it's like, nope, you need to go lower. So, and obviously you got the exit other opposite direction thing, which was already in there. So those are the inputs. We've got an initial lot size. I did an experiment using risk, monetary risk and all sorts of other risk parameters. But I like the idea of lot multiplication with this strategy because it is just it's manual position trading, and I think manual position trading or any automated position trading needs some kind of lot multiplication just to keep that average close. So yeah, that's basically it. We've got the opposite exit. And obviously there's color inputs. I don't know if there was color inputs in the previous version, but there's color inputs as well. So you can change the color of everything. So if you want your buy color to be, I don't know, lime, and your sell color to be maroon or medium violet or whatever, what will happen is everything to do with that will now change. So the colors change, the buttons, the box colors change, and also the text, the lines, everything changes. So everything is completely color coded to whatever you set, basically. Yeah. So those are the inputs. So the thing that I've been working on yesterday is the auto trade zones. So to get, as I said earlier, a product onto the marketplace or anything onto the marketplace, whether it be free, paid, whatever, if it's an EA, it has to be able to trade. The whole point of an expert advisor is it trades. You can't put something on the marketplace that doesn't take trades because they need to test it. So it has to have a functionality where it just takes trades. So I thought, well, the easiest way to do this, I'll just turn that to false for the minute. The easiest way to do this is to basically, when it starts up, let me just slow it down. When it starts up, it basically just goes, oh, that's a horrible color. I can't do that. Just reset to defaults again. So when it starts up, it basically just places a buy and a sell box. Yeah. Why not use risk over ADR for lot sizes? Vitaly. Yeah, that's what Mark just said. That's what it would do. The other strategy. Yeah. So I missed your comment then. So what it does, it literally goes, okay, place a box at, I think the spacing I decided was, I thought it was spacing. I can't remember the logic, but it basically places a box above and below price. Yeah. So immediately we're just going to get in if price moves the distance. Okay. So I'll let this just take a trade. There we go. So we've taken a sell, and it now uses the next sell price, which is our spacing input we've got. So at the moment it's set to 3/4 of an ADR as a default. It leaves that box in place. And what's happening is if that sell now moves down to that box, it takes the profit and immediately goes long. So it's an always in strategy. It's never, ever flat, right? So as it shouldn't be. If you're trading support resistance on a chart, yeah, you are drawing in where you think it's going to turn. So if you think it's going to turn there, you get out when it goes short, obviously. Yeah. But you could use it as a TP. And not getting along, but this won't do that because this is what it's designed to do. But anyway, so we move down into there. It now takes along. Yeah. So we've got our next buy price there. That trade has worked out. Happy days. So what we're doing now is we wait until the end of the day, which is there. And it automatically now puts the next boxes in place. So with the sell box, what it does is it says, find me, if I have a long trade on, find me the average price and place the box, whatever your spacing is, in this case, 3/4 of an ADR, I think. 32, hang on, no, sorry. Oh, what did I make the logic on this? Did I just make it 30 pips? I think I did. Yeah. So what I did was I made the logic, put it 300 points above the average price. So what I'm saying is, if we've got a long on, automatically just get me out if we can make money the next day. Yeah. So it just places it 300 points or 30 pips above ADR, above your, sorry, average price. So if we take another trade down here, what it will do is the average price will move down, and tomorrow it will move this box down above the average price. We'll let it play out and then you'll see what I mean. The next buy box basically is 30 pips below the next buy price. Yeah. So what it's doing is it's using your long entry price and wherever we're going to get in next, and it's just using 30 pips to say, if we push down, take another trade. If it goes up, get me out and go short. Yeah. So it's doing, it's using normal market movement to enter and exit the market. Yeah. So we'll let it play out and see what it does. There we go. Next trade is taken. Average price is now here. You can see where that is. Okay. So as we move forward in time to the next day, there we go. The box has jumped down to 30 pips above average. So we've moved down. So what it now means is if price pushes up today, it's going to get above our average price and we're going to just take 30 pips out of the market. We're just going to grab some money, right? Then we're going to flip short. The next buy price is there. So we move our next buy zone 30 pips below that. So if the market continues to push down for a third day, we want to get in again. But we'll get in when we get some price action. So we're going to meet this box. If it flies through this box, it will remove the box and then draw it in again the next day. Yeah, or you could have it extend. It's entirely up to you because obviously now there's an input for that, but it didn't have that before. So we'll let that play out. Move down, take another trade. Our average price has now moved down to there. We haven't made any money yet, so this now needs to come down somewhere around there tomorrow. So we'll let it play out. There we go. We've had another entry taken there. So our average price was there, but obviously it took another trade. So let me just move it on a little bit more. There we go. So average price is there. We jump down, we try and grab 30 pips on pullback on that leg. Yeah. So the idea is we're wrong on the trade. We want to get out as fast as we can. It's normal position trading. This isn't working out. Just get me out with a small profit because it's not panned out. So we'll see that one play out, whether it comes down further. And there's our next entry. Going to sit around now. Average isn't moving. Next isn't moving. So we just sit there. We're waiting for it to come back into profit. And hit profit. So we're out of that. Now, because we're out of that, we flip short. So now we are a seller. So we are in our first entry. Our box is all the way down here. The box doesn't move. So what we're saying now is we've hit our target. We're in short. We'll wait until tomorrow. And what we will do is take 30 pips. Yeah. And flip long. And now we'll wait until the next day. And if price pushes up into that box today, we're going to make a load of money. If not, we're just going to grab 30 pips tomorrow. So the idea of the strategy, a little bit like the lazy trader strategy, is trades that work out, we just keep grabbing 30 pips out the market constantly, over and over and over and over again. Yeah, 30 pips, 30 pips. 30 pips. Yeah. 30 pips, go long. And that's all it does. Yeah. And if it's wrong, we move our price down and try and grab 30 pips. That's it. It's literally just sitting there and it's designed to just grab 30 pips all the time. And that's it. So this is the automated auto trading kind of functionality that I've built into it. That's the only way I can get it out there on the market so that it can get downloaded, because it's got to have an auto trading function. So I built this in as a get past the marketplace rules thing. On back testing it, I'll just move it over to control points so it's faster. On back testing it, it's profitable, which I was quite shocked about. Because that's obviously not why I did what I did. But if you think about it, it is just position trading using normal position trading methodology, and the fact that we're adjusting our price and we're getting out if things go wrong. Now, the problem with it is obviously there's no drawdown control in this. So I wanted to look at having some kind of drawdown control functionality built in, because this obviously can go into drawdown indefinitely. And obviously then it will blow the account. And I have done some tests where I have blown the account. And obviously if you just increase the lot size, you'll find that out. That's basically what it does, is it just continuously makes money because it's just looking to make 30 pips on market movement. And when you've got an average daily range of 600 to 800 pips, and the reason I picked 30 pips, just to clarify, if you look at ADR, 49, 44, 55, 51, 50, 120, 160, we don't get down to 30 pips on anything. So what my like logic behind the distance that I've picked is that within, and obviously I'm designing this for forex, the idea is there's no real pair that you can't put this on. So if we're targeting 30 pips with New Zealand dollar US dollar at the moment, we're looking for roughly 3/4 of a daily movement. If we're putting it on the pound yen, we're looking for about 15% of the daily movement. But the target, there you go, euro pound is the lowest one, is 39. We're looking for roughly an ADR of movement on that. We know that 58% of the time the market moves within ADR. So 58% of the time there is a chance that it's going to move far enough to get you out of a trade every day. So if you just literally put a box on a chart there and a box on the chart there within the average daily range, there's a 58% chance edge that you're just going to hit it every day and make 30 pips. So that was my logic behind the distancing for the average targeting. There's the result on that. So there's 25 grand profit there on that with 11 grand of drawdown. Yeah, so the profit factor is 3. And this isn't something I've gone, oh, this is a great strategy I'm going to plan. This is pure luck, if you like, that I decided I've got to have some automated functionality. I'll tell you what, I'll just get it to put 2 boxes on the chart and see what happens. Yeah. If you're using proper sort of targeting with position trading, in the fact that we know that the market moves within ADR, and as long as everything we do is within ADR, we've got a high probability of it working out. That's basically what's happened in this particular case, isn't it? So so that's what it does as an automated facility. Now, there are pairs where I've done tests. Was it the Aussie CAD? I can't remember which ones it was, but there were pairs. I haven't done much thorough testing on this yet, but there were pairs where it did blow the account. So that's why I thought we're going to need some drawdown control on this. Let me just see if this is the one that blew. I can't remember what it was that blew. This is really stuck. That got stuck for ages there. So we took some drawdown on that. It's 5 grand's worth of drawdown. It's up 2 grand, but it's taken 5k of drawdown so far. This might be the pair that blew. Doesn't seem to be. It's not making a lot of money. It's getting stuck here at the moment. It's just getting stuck miles away from the average price. There you go. So not ideal, is it? So I was going to put some kind of drawdown control facility in. Then I suddenly realized we've already got one, because we've got here, we've got the timed exits, which we can test. So we can say, when you're in a position like that one there that was hideous and went on for ages, just get us out. Just get us out after a period of time. Yep. So we can get each individual trade to exit after a period of time if it hasn't worked out, which will do automatic drawdown control. We've also got exit at money. So if we set exit at money to true and set the upside target to something like $10,000, never going to get hit. But I set our downside target. This is going to do drawdown control when we reach a monetary amount. Yeah. So if you set it at $200, for example, you'd need to look at what the costs, what the average trade is. So average trade, yeah, $200 is probably not a bad amount, actually. Let's just try that. So yeah, we can use the monetary drawdown amount. There you go. So it's doing some drawdown control. So it went long there, second long there, third long there, fourth long there. So it's done 3 drawdown controls. It's hemorrhaged $600. Yeah. But the drawdown will be kept obviously under control. So a little bit like the lazy trader strategy, if it gets to a certain point, and you can play around with the monetary values, if it gets to a certain point where it gets stuck in a squeeze, we need to get out of that squeeze so we can get the average closer to make sure that we stay on top of the drawdown. All the time it's not squeezing and it's doing all this stuff, it's just going to continuously print money over and over and over and over again. So it will come down to, as it often does with position trading, how many squeezes are you going to get in a year on each instrument? And you can control the drawdown basically by adjusting that drawdown control amount of money. So I haven't done any thorough testing on this yet. I was going to put a drawdown control facility in there for maximum number of trades like the position trader EA has, but the ones that we've got built into the EA at the moment seem to be enough, I think. So you see it's not really making any money. Well, it is making money. It's not losing a fortune, but it's not really made a lot of money yet either. Yeah, because it's having to do continuous drawdown control. So that drawdown control setting is probably far too tight. Basically, $200 is too tight based on whatever the risk is. Initial lot size there of 0.2. So probably want to get in with a smaller lot size initially on it. Again, we can test different stuff like distances between trades and things, but the whole purpose of this is not to be an EA, an automated EA. I've stumbled into this, holy crap, this makes money anyway type scenario, but this isn't what the EA is for. The EA is so that you can place blocks on your chart and manually trade support and resistance, and also train yourself to do this in the tester. It's kind of evolved into something now that actually auto trades and makes decent money as well. But I'm going to put this out there so you can play around with it. And if you want to do some back testing from an automated perspective. But the main changes that I've implemented from version that you've got already is the 3 different types of entry mechanism, which is something that I can't remember who it was asked for, but someone asked for, well, you need to have this working multi-time frame so that we can take lower time frame price action within the zone. A bearish candle on the zone you're looking at, in this case 1 hour chart, means that there has been bearish price action on the lower time frame. Just use that. Yeah, it's just as good. If you say, can you implement a moving average cross entry on the 15-minute time frame so that I can trade hourly zones and I want to take a trade on the 15-minute time frame? If you get a bearish candle on the 1 hour chart, you've had a 15-minute cross on the lower time frame. Yeah, it's the same thing. So so those are the things that have changed. And obviously the extension of zones is another thing that you can play around with. So when the reason that specifically I looked at this was when I was doing visual back testing, I was finding a lot of the zones would get blown through, but it wouldn't get far through the zone. So let me just do an example. I think let me just, I need to do this on tick, otherwise it goes far too fast. So what I found was that it would blow through zones. I'll leave that one up there. Not really anything to the downside I fancy there. That's a good level. So it would blow through the zone. But what will happen is, let me just stop it there. So you get down to somewhere like this, and then you get a news event which would like do that, but it wouldn't get very far because it's already extended, because it's already on the way to the zone that you've drawn, to the support area. What happens is the limit orders here all fire at this level, and they get blown straight through. So what happens is they flip to shorts. The long orders there flip to short orders, but the short orders that happened on the news are exhausted. So what you tend to find is it pops through the zone, but doesn't manage to get very far through the zone before it comes all the way back up again. So what was happening is you would draw that zone on there, you'd get down to there and it would fly through it, it would delete the zone, wouldn't take any trades, and then it would work out. And I saw that happening over and over and over again in the tester. So I thought, well, if that scenario happens, let's just extend the zone. So let's say that's the price action we saw. Let's just get the zone extended down. And then obviously, as soon as we get a bull candle here, we get in. Yeah. So the zone is now not here, because remember, support resistance, yeah, is not exact. All of this price action selling here is happening at this point, but it's not happening at exactly that price. It's blown through it, and it's blown through it, and then it's come back down again, yeah, because the limit orders are not sitting at that price point. They're sitting at this zone, which is why we draw the zone. So so that's basically the logic behind having the extended zones on. So I wanted to test that, and I've done some testing, some visual testing. It's kind of taken over my life this a little bit, because it's something I wish I'd have built this sort of 5 years ago when I was manually trading, because this is exactly what I used to do, all I used to do before I built the market reversal alerts indicator to start automating what I did and visually showing price action reversals. This is all I did. So I wish I'd have built it years ago, but that's the sort of adjustments that we've made to it, or I've made to it. So that area there, it's kind of where I'd be looking at. There's a little wick there, but I mean, I'm just going to draw it there. So I mean, it's blown through that area, but it had a little pop up, didn't quite get far enough. I was just trying to try and make it extend, but it's not going to, because I keep drawing my support resistance zones far too big. Probably won't get down to that one before it pulls back, because it's gone way too far, and that needs to pull back before it drops. Yeah, so there's a wacky great propulsion gap there, look. Oh, that's the other thing I was going to cover as well, actually. It just completely reminded me. Propulsion gaps. So you can also use this as a tool, which is, again, something I didn't really think of, but makes total sense. Grab the box. You can use this to manually drawing propulsion gaps. So obviously that is a propulsion gap there. And you've got another propulsion gap there. Yeah. So you can also use this as a tool to manually trade propulsion gaps, or rather automated stroke manual trade propulsion gaps. So I probably want to get in short there, but we didn't get any because it blew through. So if it's blown through that propulsion gap, the next one is there. Probably go for that, actually. Yeah. So we sold there because we got rejection at propulsion. Now I'll see if we can come back up. That's probably too close, isn't it? Yeah, so that's too close. So just go with the highs. Yeah, so that's basically what it does. That's the amendments that I've made. But the auto trading thing, have a play around with it, because there is the possibility of having a fully automated system that just works on scalping small movements out of the market, which is, you know, it seems to do very, very well, but it needs some drawdown control done on it at the end of the day. I've gone long, haven't I? Oh, get out there. Okay. Yeah, so have it. I'll put this out there so you can have a play around with it. But it probably will need a little bit more work on it if it's going to be something that's going to be used in real world trading. Because that isn't why I built it. I built it as a tool to sort of using the tester to help. But obviously, it makes logical sense to use it because if you hone your skills to a point where you're like, holy crap, I've nailed trading using this type of strategy with position trading, you're going to need a tool to do it, aren't you? So it doesn't make sense not to have it out as a product, really. Go on. So yeah, it's going to need some revisions and some amendments made to it to fine tune. There's probably going to be things that it does weird that we might think in real world use. I don't want it to do that. So we can play around with it and adjust it, but that's kind of what I'm planning on pushing out as a release type thing. And I will start using this. I'm probably going to set an account up to trade this because it's no different to what I'm doing at the moment. It's just it's not going to use indicators, and that's the whole point, isn't it? It's position trading without indicators, which is where it all came from. See, the 30 pip target would be somewhere around there, but I personally would look for them to come and retest this zone. So the automated version is too complicated to try and get it to calculate particular levels. It needs to be done manually. So it's a case of every day it will automatically adjust the boxes if you leave it on auto mode, but there's nothing to stop you coming in and every day just adjusting that box, and the next day it will put it back, and then you can adjust it again, and then you can put it back. So you would be kind of fighting the EA for where you think it will go, and it just wants its 30 pips. One of you will be right, but either way it will always have a box to take profit if you put that auto trading mode on. Yeah, so every day regardless it's going to draw a box 30 pips away to make you 30 pips. But if you don't like where it draws the box, adjust it yourself and then come back and see what's happened today. Tomorrow it will adjust it back for you. Yeah, so go long, go short. It's far too quick. See how quickly it makes money, yeah? Because the market just, you know, I keep saying this over and over again, and I never stop saying it. All the market does is go up and down within ADR. So if you say, give me some money within ADR every day, there's a very high probability it will just give you money within ADR every day, because that's all that the market does, isn't it? It goes up and down. So the idea of setting these little targets is just purely just to give me money every day, please. Lovely. If it doesn't work out, we deal with it. It's a position trade. Now we're going to start looking and analyze the market. But if the market just does that for 3 weeks, just let it do that for 3 weeks and just take cash out the market. Then it suddenly goes, oh my God, we've had a news event, or there's been an invasion, or something's happened, the market's taken off. Right, now I'll start adjusting the boxes and making distances better, levels better, that sort of thing. But this is in a sell. So I'm going to say, instead of going for me 30 pips, Mr. EA, I'm going to go for that area there. Yeah. So it's an area we've hit. We've chopped about in it. Yeah. So I'm going to say, try and get me that. It's probably, that's probably 30 pips, isn't it? Sod's law. Yeah. 25. Anyway, you know what I mean. There we go. So, and also what will happen is if price has moved beyond your box and deleted it, the next day it will immediately draw the box on and take the profit for you. So it will always get you out of your trades as well and flip you back the other way if it's gone way beyond that level, because we probably want to be going for longs now. So that box up there, I would probably say stick it there for me, and let's see if we can hit. Actually, I'll probably put it there. Look, on these lows. So let's see if we can hit that, which is 38 pips. So if we can try and get 38 pips today, if we can't, tomorrow it will move the box for you. The average price has jumped down, so it'll do it the next day. But there's nothing wrong with that as a level, is there? But just move it down to that little accumulation and see if we can retest the accumulation today. It's a long way to go, but, and if we can't, fine. Let the EA adjust the box, and then you can readjust it. So every morning, all you've got to do is look at where the EA's put the box in auto mode, because bear in mind, in the strategy test, we're seeing days play out. In the real world, it's very, very slow, isn't it? So go, all right, well, I still want my box there, please. Yeah. And if it takes another trade, it's going to move your price. So it's adjusted it again. And I'm like, I'll come in the next morning and go, no, still like that. Just fight it. But it's always going to have a target for you. So it's always going to say, if you're asleep, don't worry, I'll get you out. So it's a nice little, the auto trading is a nice little functionality, but it will auto adjust every day to try and just make you some money. So anyway, I'll put it out there. You can play around with it. If you've got any ideas for it that you think it would be really cool if, and it's easy to do, then yeah, I can add it. But try not to get too hung up on the auto trading. It's not what it's for. It's a manual support and resistance tool so that you can automatically trade the zones that you think price is going to bounce at. So it's literally for identifying limit order areas that we can trade. Yeah, that's the point. And obviously any time frame. I haven't done any testing on 5 minute or any other time frame at all. So there's 4 hour time frame. If you want to be super slow and just look at your charts once or twice a week, 4 hour time frame might be the one for you. Yeah, much slower. And again, so going to adjust it every week here. Sorry, every day still. So you still have to check it every day, but that's a good looking. I was going to say that's a good looking area. See that auto adjust, and then it's like, no, I don't fancy that. I fancy somewhere else. Yeah, play around with it. Anyway, I'm waffling. Is it possible to automatically put zones on H4 highs and lows or daily, weekly highs and lows? It could, but then you would be taking losses. So if you think about it, I have coded this already, and I got rid of it because if you think about it, let's just let this trade play out because we know this drops. Right, so let's wait for this to drop a bit more. So yesterday's high is there at the moment. Yeah, this is today's high. So as we move down, okay, your target is now yesterday's high. That's below the average price. If we hit yesterday's high, you're going to take a loss on your trade, which is fine. I can make it do this, but bear in mind, you will make a loss if you target yesterday. Right, so now yesterday's high is there, isn't it? Yeah, I don't want to target yesterday's high. I want to target profit, which is why I've got it to automatically adjust to your average price or the average sell price or buy price plus a distance. Because we want to make money. We don't want to make loss. It will just hemorrhage and your P&L will go down. I've been doing this manually on another account, just using the position trader EA for sizing. Yeah. So yeah, sizing wise, it uses lot sizes and lot multiplication. It could use risk over ADR, but I mean, there's no right or wrong way of doing things. So there is a way that I could make it do risk over ADR, but I could put it in as an option, I guess. But then I'd have to build a lot multiplication system in like the position trader EA, which is a lot of work. because it has to store levels and do all sorts of other stuff. But do you just install it like you would a custom indicator? It's for the strategy tester. So yeah, with indicators, basically all you do is you go to install it, you just basically put it in the experts folder. So go to File, Open Data folder. Yeah. MQL4, experts. Dump it in here. Yeah. That's where it goes. Looks really good. Great so far, especially to kill manual over trading too, besides slow grow auto trading mode. Yeah. It needs a lot of testing. I mean, this is kind of a double-edged sword. I don't really want an auto trading facility in it because it's not what it's for. You know, this when you build tools, I only build tools that I want to use. I build tools for me, and then I go, here, go everybody, this is what I do. And you either like it or you don't like it, you get it or you don't get it. It doesn't matter. I charge very little for everything I do because I have to support it. And I have to keep recoding it and stuff, but I don't make a lot of money out of selling this stuff. It's not what I do. I do it because I love doing it. But everybody out there wants something to automatically make them a fortune. And I want this out there as a tool so that people can use it in the strategy tester to teach themselves how market movement happens. This is the whole point of this thing, why I built it, so that you can use it to trade support resistance zones. That's what happens. Next time it gets up there, it's going to bounce. I know it's going to bounce, but I want you to prove to yourself it's going to bounce by placing a block there, letting it trade that block and making money out of it. Yeah. And if you do that enough, you will start doing it. If you place an auto trading facility or an auto trading button in a tool, everyone just goes, oh, it makes a loss. Yes, because it's not designed for that. It's a manual trading tool. I have to have automation in there because otherwise I can't get it out on the market. But it's not what it's for. So play around with it by all means, but don't lose sight of the fact that this is not what it's for. This is false as far as I'm concerned. This is up to you. These are up to you. The risk is up to you. The spacing is up to you. At the end of the day, this is your alert for, I don't want to put my trades too close together. It's up to you how far apart you space them, but my recommendation would be 3/4 of an ADR, because anything lower than that, you could, parabolic move like this, for example, over a period of 3 days has moved 227 pips on the Aussie CAD. Yeah, it's 50 ADR. That's a 5 ADR move roughly, something like that, isn't it? Yeah, so this has moved 5 ADR to the downside. If you space your trading 1/4 of an ADR apart, you're going to be a lot of trades. If you space it 3/4 of an ADR apart, i.e. in this case about 75 pips, you're not going to have more than 3 or 4 trades on. It's going to want to pull back on it. Yeah, so that input there, and the same as in the position trader EA, is your don't be an idiot and put your trades too close together button. Up to you. I will set it at what I use, which is 3/4 of an ADR, but you might want half, you might want 1, you might want 1.5. Yeah, if you're trading 4-hour time frame with this, you might want to wait a lot further between your trades, especially if you're trading daily. Yeah, that's too close for trading daily. That's personal preference as to how wide it draws the blocks. Colors are personal preference. ADR 10 is what I use. You could use ADR 60. It's not going to make a lot of difference. All it's going to do is slightly adjust the lines drawn for the next entry. That's it. So, but other than that, the other inputs are, how do you want to get out? I haven't tested any of this because it's not automated. I want to get out when it gets to the zone I think it's going to, because that's where I've said that's where I think it's going to short. So it will automatically get me out there and get me in. So I don't need any other exit strategy, because if I'm drawing the zones on, what I'm saying is, and this is the whole point of this, is whenever you look at a chart, there is 2 things it can do, go up and down. And the whole point of drawing these boxes in is, where do you think it's going up to? And where do you think it's going down to? Wait for it to do one of those. Okay, it's done that. Where do you think it's going up to? Because it's gone up, where do you think it's going down to? Wait. Don't do anything. It's gone down to where I thought. Right. Now I'm in long. Where do I think it's going up to? Where do I think it's going down to? It's a tricky one, that. But that's literally your decision-making process in trading, because you have no clue if it's going up or down. But if it's going to go up, where? If it's going to go down, where? Sit and wait. If it goes up, you make money. Then you get in the other way. If it goes down, you get in again, you adjust your price and go, okay, didn't go up, it went down. So if it goes up again, I reckon it's going to go up to this area and maybe bounce off of one of those. If it's going to go down, it's going to go down to that low there. But that low there is too close to my 3/4 of an ADR rule I've placed. So I can't do that. So I'm going to need to move it down a little bit. So where do I think it might be going if it's not going to go to the level I thought? Maybe down here. There we go. Okay, so it went down. So now where's it going up to? It's an area there. Try that. It's got to be above my average price to make money. It's literally all you're doing, isn't it? If it doesn't work, I need to find somewhere it's going to go to next, which is probably going to be here. But that's going to be far too close to my current entry, which is somewhere around there. So let's pick this zone down here. This is what it's for. It's going to take forever now. It will get there eventually. But this is expectation. The lovely thing about the strategy tester is it builds expectation. You can see these. You probably can't see them because they're very light. I've got them set, but these weekly separators, yeah. So it went up to where I thought it was going to go up to. Brilliant, we made some money. Stop. It teaches you how long it takes to do things as well. So right. So now if it comes back down into that area there. Yeah. That's where I think it's going to come down to from where it is. And if it goes up, I think it's probably going to come back up into this area here. But I can't take a short there because it's too close to the one I've just taken. So I'm going to need to find a zone up higher. There. That is trading. It's going up and down. Your job is where? Is to guess where. That's it. Your job is to guess where and control your risk by not putting too much money in the market. We've been sitting around for 3 days now, going nowhere. Now we're going down. There we go. So we're going to hit our target to the downside where I thought it was going to bounce. Let's see if it bounces. If it bounces, great. Where's it going to bounce to? Well, I think it'll probably bounce up into that area again. If not, I think it will probably go down and test that area. I don't know. But this is your job, isn't it? Your job is not to know where it's going because we can't. Your job is to guess where it's going using what it's always done in the past, which is heading towards zones. But you can use propulsion gaps. Went down. So now we need to look at where it's going to the downside. Well, that's too close because I drew my block in far too big. So I'll pick that little low down there. I have no idea if it's any good or not, but let's have a go down there. But if it goes up, it's probably going to test this area here again. If it gets up to there, it'll probably bounce off of that. Blew through my zone. So there's a good example of it blowing through the zone, yeah? So it blew through the zone and it bounced. So that's where that setting for extending comes in. if you set that to true, it would have taken a trade there when that price action hit. So it would have extended the zone down, and that bullish candle there would have become an entry. Yeah, but go and play with it. You know, you'll see what it does. And if you find anything that doesn't work properly in the tester as well, obviously let me know. But I've been testing it quite significantly. But I mean, this is, to me, this is pretty much doing everything I need it to do, or everything I would want it to do as a proper tool. So if you put a zone before it reaches 0.7 spacing, it won't take the zone into consideration to trade. Yeah, that's what that message is for. So the message I should maybe say, yeah, I mean, I should maybe change that text. So if I put another sell limit there, yeah, it's basic because it uses the lower the box. Yeah, so you wouldn't, I mean, I'm just leaving the boxes at the size they are. In the real world, what you would do is say, I think we're going to bounce off of this area here. You wouldn't have a box that big on it, but it only takes that line into account. So the idea is you've got a zone here, look. So these highs here, this high here, this high there, somewhere in that zone, I reckon we'll get a bounce out. It's actually bouncing there, look, but it's too close. So the sell zone is below the next price line, which is basically stating the obvious. The sell zone is below the next price line. Please, please find a higher level, Mr. EA. Find higher resistance. So it's saying move your box up. So I should say will not trade or something. But I don't want to be like invalid level, that sort of thing. It's just I want this to be helpful. Yeah. Find a higher resistance. I should say won't trade here. Find a higher resistance. I'll maybe change the text. But what will happen is if it does that, look, what it will do, it doesn't go up, does it? It goes down. So let me do another one here above that level. So what it will do is yeah, so now we've pushed down through the zone. We've got that error message in down at the bottom. So now it extends the zone, and it will keep extending the zone. Yeah, but the trigger point is there for the enter, for the open and close, or the spike through and close above. That is the zone. But for the trade inside, yeah, it doesn't use that level. So that error message is actually invalid, because if this pushes down further and we get a bullish candle and it's below that line, it will actually take a trade. There you go. See, that error message doesn't make sense, does it? Well, it's not an error message. It's just telling you you're too close. So I need to change it to will not trade piercing or open inside, close outside, but will trade. You know, the message just gets too long, doesn't it? I could put a load of if statements in to change the message depending on what. I mean, it's becoming, it's becoming overly complicated for what it is. I don't want to make it overly complicated. I want to make it really simple. There's a box, draw it on the chart. It's too close. Move it further away. Yeah, or change the size of your box. That's what you need to do, isn't it? Yeah, if you draw your box and your box is here, what it's saying is move that line so that it's below that line. Just adjust your box. You can make it deeper if you want to, doesn't matter. But just make sure that is below there. But that's only relevant if you're using either the piercing or open inside, close outside. For enter on price action inside, it's irrelevant. As long as the close of the candle, the bullish candle in that case in the bull zone, is below the line, it will take a trade. even if your line is above, if the top of the box is above there. But you know, it's but these are things, you know, I can adjust, but I don't want to overcomplicate it. What started as a, here, use this as a tool, has turned into something which could become an incredibly complex EA system. But I don't really want it to get that complicated, if you see what I mean. Anybody got any other questions on that? Out the footsie, nice 670 this morning. Nothing much else moving at the minute. There you go. So that's it for this morning's session. That's all I wanted to cover, really. So I'll push that out into the group, and then you can play around with it in the tester. I will do some, I haven't got an MT5 version at all, so it's MT4 only. I will need to build an MT5 version if I'm going to put it out there as something to actually use, because everyone will want the MT5 version. So not everyone will want it, but some people want it. So I'll need to make one for MT5 as well. But if there's anything you've got that you can think of that you might think is an improvement on it, I'm just drawing propulsion gaps in for no reason whatsoever. But if you, I'll continue. If you have anything that you think it might make it better, then let me know. Any problems you find, more importantly, let me know. But it does everything I think it needs to do. I don't think it needs any more complication in it than what it does. So when you say you are putting it out there to take a look at, whereabouts are you putting it? In the Discord group. So in the Discord group, version 1 of this is in the Discord group already. I'll post version 2 in the Discord group. So you just basically, it's Neo, you download it, go to your terminal, open data folder, navigate to the experts tab in MQL4, dump it in there, and then it will appear. Once you hit the refresh over here, it'll appear in here, which is in your expert advisors section. Yeah, but you can't drag it onto a chart. So if you try and drag this onto a chart, that one, I can't find it. Yeah. It will come up and say you can only be used in a strategy tester. So it is only for strategy tester use. Yeah. At the moment, obviously, but if I launch it as a product, which I probably will because people want it, but when I launch it as a product, it will be just normal EA. Yeah. So Discord group is where you'll find it. I'll put it out there this morning. I just need to make a couple of tweaks to it before I put it out, because there's some bits I've just noticed while I've been testing this morning that need tweaking. So I will get that out there today for you to play around with. But have a look at the auto trading functionality, because I think there's an edge in that auto trading just for scalping. But there's also a danger with it in the fact that it will potentially blow at some point if you don't do drawdown control. So you've got to have some kind of drawdown control. Whether it be, I mean, I haven't tested time-based exits, you know, exiting after 5 days and things like that. It may be that you know, we don't want to hold it after 5 days or after a period of time to do our drawdown control in that way, which will keep the average closer. So that might be something that's worth looking into. And you can test it on control points as well. It makes very little difference. And obviously it's a billion times faster on control points than tick, as you can see. I'm just going to see if I can get something to draw down. And yeah, see that exit everything after 5 days is going to take some big hefty losses on the account. So it might be a case of eyeballing the automated version and just seeing if there is an average time period, and we can do this in the quant analyzer, see if there's an average time period in which it gets into big drawdown, and we automatically close everything out after that period of time. So it's not making money now. It's not losing money though. It's amazing how easy it is to create a break-even EA, a break-even strategy. I've built so many strategies over the years that have got a zero sum, especially the stop loss strategies, because stop loss is a zero sum game, because you will never. It's very hard to find. I say never. People have, but it's very hard to find something that is profitable using stop losses, because the way the markets move just means that they will revert to stops. But that's working, look. 5-day exit. So we're basically giving a trade a week. So we'll get in, we'll give it a week. If it hasn't played out in a week, it's obviously squeezing. If it's squeezing, we don't want to be in it. If it's not squeezing, we're just taking money every day. So what that filter, that 5-day filter does is say, get me into a trades only when the market is doing this. If the market does that for a week, get me out of it. And then hopefully the week after it'll do that. If it does that, keep me in it. But if the market does that, it's just going to make lots of losses over and over again. But the market doesn't do that all the time. It very rarely does that, does it? Most of the time it does this. That we make a loss on. Look at that big loss there. But look, we're still in profit. It's only taken $700 worth of drawdown. It's made $1,600 in profit. See how easy it is to make money when you just let the market move. This is what people struggle with so much in trading. I've got to find the perfect X. The market is not perfect. The market is totally imperfect. That's just made $1.5 grand over 4 years. Not a lot of money, is it? But it has made $1.5 grand over 4 years by flipping a coin every day, drawing a box on a chart and saying, find 30 pips worth of movement. There's no logic. There's no strategy involved. It's basically draw a box. If the box is wrong, move the price to a different level using another box and wait for it to be right. If it's not right in 5 days, shut it, try again next week. That's the logic of the EA that I've just built, which is completely random. Just made $1.5 grand on fluke, because all the market does is this. Yeah. So go and play around with that, with the automation side of things. You'll find loads of strategies which work, but the strategies will be based on exit, not on entry, because entry is literally just draw 2 boxes. Nothing clever, is it? It's just saying if the market moves up and down, get in. It's going to get in all the time, isn't it? Because that's what it does. Anyway, I'll leave it there. I'll get that out today. If you've got any questions, let me know. Stick some questions in Discord. Thursday session, I've got nothing planned at the moment. So if there's anything you want to discuss, let me know. I'm going to try and do a little bit more position trading content, because a couple of people actually have asked for some more sort of bootcamp related stuff to be recovered, specifically drawdown control. But I've got so much content on drawdown control, there's little more I can say about it, I don't think. So but things like spacing of trades and initial lot sizing, we can do a session on that, because that's something that 2 people now have asked about, what is best. And as I said, there is never a best, but we can use the position trader EA to demonstrate the differences between them and what happens to your accounts, just to show why spacing is important and why lot size is important. So I might do a session on that on Thursday, but I'll see. But if you've got anything else, let me know if you want to discuss anything else. But I'll work on that this morning and get that out for you, and then obviously we'll go from there with this one. But yeah, may have just discovered the Holy Grail. Never know. All right, so have a good day. Anything else you need, let me know in Discord. Other than that, I will be back tomorrow afternoon. Is next session where we're going to trade the US tomorrow afternoon, and then Thursday's the next members stream. All right, so have a good day. Anything you need, let me know. Other than that, I'll see you next time. Have a good one.